Okay, dear student, let's just start the live revision class of tax session March 25. Let me just give an overview of the basic things and then slowly and gradually we'll go ahead. We are starting our revision from the individuals. Let me quickly write the income tax rates for individuals. There are three possible sources of income for an individual. One is non-saving. The second is saving income. Third one is dividend income. Basic rate band starts from £1, goes till 37,700. Higher rate band starts from 37,701, goes till 1,25,140. Additional rate starts from 1,25,141 plus above, then there is no limit. In case of non-saving, the tax rates are 20, 40, and 45. Same applies for the saving income 20, 40, and 45. But in case of dividend income, they are different. That is 8.75, 33.75, and 39.35. And let me just repeat again. These tax rates will be given to you in exam. Now, for the saving income, there are a few additional rules. Number one, if individual is a basic rate taxpayer, then that individual gets nil rate band of £1,000. If individual is a higher rate taxpayer, then individual gets the nil rate band of £500. And there's one more rule relating to the saving income, that is starting rate band. We'll see that inshallah when to use this starting rate band. For the saving income from £1 till 5,000, the tax rate is 0%. For dividend income, every individual gets nil rate band of £1,000 irrespective of tax paying status. Another thing is, in UK, only those individuals are required to pay tax they are having income more than the personal allowance. The personal allowance is 12,570. So those individuals, they are having income more than 12,570, they are required to pay tax, of course. Now, let's question. Employment income. Obviously, employment income is a non-saving income. Property income is a non-saving income. Even the pension income is a non-saving income. When we say saving income, it means only we're talking about interest income. And dividend income means dividend income. Let's say an individual is having an employment income of 80,000. There's a pay as you earn means the tax which this individual has already paid in advance. Let's say pay is 10,000. Required. The required is number one, calculate income tax liability. Calculate income tax liability. And the second is calculate tax payable. Let's see. Obviously, employment income is a non-saving income, which is 80,000. Personal allowance is 12,570. Here comes your taxable income, 80,000 minus 12,570. So the taxable income is 67,430. Basic rate band is 37,700 into 20%. 37,700 into 20%, I'm getting 7,540. Now from 67,430, we will deduct 37,700. Whatever comes, that will fall in high rate band. 67,430 minus 37,700. I'm getting 29,730. Applicable tax rate is 40% for the high rate. I'm getting 11,892. 11,892 plus 7,540. So the income tax liability of this individual is 19,432. This is income tax liability. But this individual has already paid tax in advance. Pay as you earn is 10,000. Here comes the tax payable. So income tax payable is 9,432. Now another rule. If pay as you earn is more than income tax liability, in that case, the difference is tax refundable. And if pay as you earn is less than income tax liability, then difference is your tax payable, which is in our case, our question, which we just did it. Difference is tax payable. Okay. Let's say we have employment income 70,000. We are having saving income 20,000. Required income tax liability. Let's try. Now we have two incomes. One is coming from the non-saving, another is saving income. Non-saving, saving income, one more column for the total. So employment income is 70,000, which is obviously a non-saving income. Saving income is 20. So the total is 90,000. Personal allowance will be deducted from the non-saving, that is 12,570. After deducting the personal allowance, we'll get taxable income. 70,000 minus 12,570. I'm getting taxable income 57,430. 20,000. So the total taxable income is 77,430. Number one, first you have to apply tax rate on non-saving income, then saving, and finally dividend income. Let's calculate income tax. Non-saving, basic rate band limit is 37,700 into 20%. I'm getting 7,540. Now, the basic rate band is fully utilized, but still we have taxable income. From this 57,430, we have to deduct 37,700. Whatever comes, that falls in high rate band. 57,430 minus 37,700. Non-saving, which falls in high rate band, that is 19,730. How did I get 19,730? Repeat. From 57,430, we need to deduct 37,700. You will get 19,730, which falls in higher rate band, where applicable tax rate is 40%. 40% of 19,730 gives us 7,892. Now, we have to apply tax rate on saving income. But before applying any tax rate on the saving income, we need to check individuals' tax rate payer status. Because if individual is a basic rate taxpayer, will have nil rate band 1,000 pound for the saving income. In case of high rate, it is 500. How do we decide the taxpayer's status? By looking at the total taxable income. In this question, the total taxable income is 77,430, which is more than the basic rate band. If your total taxable income, which comes in the final column, if it is more than a basic rate band and less than 1,25,140, it means this individual is a high rate taxpayer. Whoever is a high rate taxpayer gets nil rate band of 500 pounds for the saving income. So this individual qualifies nil rate band saving income 500 pounds. Obviously, the remaining saving income falls in high rate band because basic rate band is already utilized. 20,000 minus 500 because 500 we have taken in the nil rate band. 19,500 applicable tax rate is 40%. 19,500 into 40%. I'm getting 7,800. So let's see what is the income tax liability. Students, I'm getting it is 23,232. That is your income tax liability. Let's say employment income is 60,000. Saving income is 10,000. We have the dividend income 20,000. One more thing regarding saving income. Is here. If individual is an additional rate taxpayer, then no nil rate band for saving income. So if someone is an additional rate taxpayer, then does not get any nil rate band for the saving income. But when it comes to dividend income, every individual, every means every individual, irrespective of that individual's tax paying status, will get the nil rate band of 1,000 pound for the dividend income. Okay, the requirement is calculate income tax liability. Let's try. Now we have all three sources of income: non-saving, saving income, and dividend income, and obviously total. Employment income, which is non-saving, 60,000. Saving income is 10,000. Dividend income is 20,000. So the total is 90. Personal allowance, the sequence of deducting the personal allowance is: first, personal allowance is deducted from the non-saving. If you still have the personal allowance, go for saving, and finally you will go for dividend income. Personal allowance is 12,570. Calculator. 60,000 minus 12,570. I'm getting taxable income 47,430. 10,000, then 20. 77,430. Now let's calculate income tax. First, you have to deal with the non-saving income. Basic rate band is 37,700. 20% of that gives us 7,540. From this taxable income, which is 47,430, out of this 47,430, we have applied tax rate on 37,700. So 47,430 minus 37,700. I'm getting 9,730. That obviously falls in high rate band because basic rate band is fully utilized. Non-saving, that is 9,730. How did I get 9,730? From 47,430, you have to deduct 37,700. So you will get 9,730. Applicable tax rate is 40% because basic rate band we have fully utilized. And once the band is utilized by any income, then it is used for rest of the incomes as well. 9,730, 40% of that is 3,892. Now for the saving income, first we need to decide the individual's tax paying status to check how much nil rate band is available. Tax paying status is always check on the basis of total taxable income. The total taxable income is 77,430. Total taxable income is 77,430, which is more than the basic rate band, and obviously it is not exceeding 1,25,140. So it is, this individual is a high rate taxpayer. Whoever is a high rate taxpayer gets nil rate band of 500 for the saving income. Saving income, nil rate band is 500. From 10,000 saving income, 500 we have taken in the nil rate band. So the remaining 9,500 obviously falls in high rate band because basic rate band is already utilized by the non-saving income. Applicable tax rate is obviously 40%. So 9,500 into 40%, I'm getting 3,800. Now we'll go for dividend income. And for dividend income, we have already discussed. Every individual for the dividend income gets nil rate band of £1,000 irrespective of tax payer's status. So dividend income, nil rate band £1,000 into 0% is obviously 0. Out of 20,000, 1,000 we have taken in the nil rate band. So the remaining amount is 19,000, which falls in obviously higher rate band because basic rate is already utilized. Dividend income, the remaining amount is 19,000, which falls in high rate band where applicable tax rate is 33.75% for the dividend income. So 19,000 into this, I'm getting 6,412.5. So make it 3. Let me recheck. 19,000 into this. Yes. 7,540 plus 3,892 plus 3,800 plus 6,413. Students, I'm getting 21,645. This is income tax liability. Okay, question. Now I want every one of you to attempt this question. Let's say we have employment income. 10,000. We have saving income 15,000. We do have dividend income. Let's say 8,000. Required income tax liability. I'm giving you 2 minutes to attempt this. Please, everyone, attempt this. Okay, let's see. Students are sharing answer. One student says 4,086. What about others? Let's try together as well now. The first column is non-saving income. Second is saving income. Then we have dividend income. Finally, total. Employment income is a non-saving income, which is £10,000. Saving income is 15,000 and dividend income is 8,000. Yes. So the total is 33,000. Personal allowance, obviously, first we'll deduct the personal allowance from the non-saving income, which is 10. Remaining personal allowance will be deducted from the saving income. Total personal allowance is 12,570. 10,000 we have taken in the non-saving income. After that, still we have 2,570. Taxable income. In the column of non-saving, taxable income is 0. Saving 15,000 minus 2,570. It is 12,430. Okay. Now we have to apply, obviously, tax rate. A normal sequence of applying the tax rate is first non-saving, then saving, finally dividend. Right now, in the column of non-saving, taxable income is 0. So obviously, we'll start from the saving income. Now listen and listen carefully. Look at this. In the column of non-saving, taxable income is 0. If taxable income is 0, it means for the saving income, now you will get starting rate band as well. Previously, we were not getting any starting rate band for the saving income because in the column of non-saving, the taxable income was more than £5,000. So whenever your taxable income in the column of non-saving is more than 5,000 or equal to £5,000, then starting rate band will not apply. Here, starting rate band, entire 5,000 is available because in the column of non-saving, the taxable income is 0. So first, starting rate for the saving income, £5,000 into 0%. And obviously it is 0. After that, now you have to also check for the nil rate band for saving income. By looking at 20,430, which is the total taxable income. The total taxable income is 20,430, which is in fact not exceeding the basic rate band. So this individual is a basic rate taxpayer. And whoever is a basic rate taxpayer gets nil rate band of £1,000 for the saving income. So nil rate band, saving income, 1,000. So the total saving income is 12,430. Out of this 12,430, we have taken 5,000 in a starting rate band, 1,000 in nil rate band. So whatever remaining saving income is left, obviously that falls in basic rate band. So 12,430 minus 5,000 minus 1,000. So still remaining saving income is 6,430, obviously falls in basic rate band where applicable tax rate is 20%. 1,286. Dividend income, we know that every individual for the dividend income gets nil rate band of £1,000. Dividend income nil rate band, £1,000 into 0% is 0. So from this 7 we'll deduct one, from this 8 we'll deduct 1,000. So remaining 7 obviously falls in basic rate band because this individual is not exceeding basic rate band. The total taxable income is 20,430, which is less than the basic rate band limit. So remaining dividend income is 7,000, obviously falls in basic rate band where applicable tax rate is 8.75%. So 7,000 into 8,7. I'm getting 612.5. Make it 613. So student, it is 1,899. I think while solving this question, you, I think, have not used starting rate band. Now, let me give you one more thing. Non-saving after deducting the personal allowance. After deducting 12,570, you will get taxable income. Now, just few cases, assuming in the column of non-saving, the taxable income is 1,000. If the taxable income is 1,000, then starting rate band for obviously saving income will be 4,000. Second, if taxable income after deducting the personal allowance in the column of non-saving, it is 2,000, then you will still get a starting rate band for the saving income, but 3,000. If taxable income in the column of non-saving after deducting personal allowance, it is 4,000, then you will get a starting rate band 1,000 for the saving income. But if taxable income in the column of non-saving after deducting the personal allowance, it is 5,000 or more, then you will not get any starting rate band. No starting rate band. So the issue of starting rate band only arises when taxable income in the column of non-saving is less than 5,000. Look at this. When it was 1,000, so starting rate band 4,000 was available. If it is 2, then 3,000 starting rate band is available. If it is 4, then 1,000. But whenever taxable income in the column of non-saving, either it is 5,000 or more, then you will not get any starting rate band. Okay, now let's move. Now, there's one concept regarding pension. Basically, in taxation, there are two types of pension, both are in our syllabus. One is occupational pension scheme, another is personal pension scheme. Let's say personal pension scheme means you can say like an insurance policy. That individual has taken the insurance policy for himself or herself. Occupational pension scheme means when you are working as an employee and your employer is running the pension scheme, then that is an occupational pension scheme. Right now, I'm discussing personal pension scheme. If someone contributes in personal pension scheme, then what are the tax implications? I repeat, what are we studying? If someone is contributing in personal pension scheme, then what are the tax implications? Tax implication means tax consequences. So number one, whatever individual contributes in personal pension scheme, that is treated as 80%. 20% will be paid by HMRC. So individuals contribution in personal pension scheme is treated as 80%. 20% is paid by HMRC. Second, basic rate band, the limit is 37,700. Ends, basic rate band ends at 37,700. Higher rate band ends at 1,25,140. The second tax implication is basic rate band and high rate band limits will increase by gross personal pension contribution. So whatever individual contributes, that is 80% to make it gross. You will take individual's contribution multiply by 100 divided by 80. So another benefit to the individual is basic and high rate band limits will increase by gross personal pension contribution. There's a third benefit, third tax implication also. That is gross personal pension contribution reduces adjusted net income. Now the question is gross PPC reduces adjusted net income, then so what? And another point is, what do you mean by adjusted net income? So I'll explain that. But first of all, if an individual contributes in personal pension, whatever individual contributes, it is 80%, 20% is paid by HMRC. Basic and high rate band both will increase by gross personal pension contribution. And gross PPC reduces adjusted net income. Now, what do you mean by adjusted net income? Let me explain. Adjusted net income. We'll take net income less gross personal pension contribution less gross gifted donation. Gross gift aid donation. Now, please listen carefully. Tax implications of gross gifted donation, they are exactly same like gross PPC. In case of gifted donation, whatever individual has given, it is treated as 80%, 20% is paid by HMRC. Basic and high rate band both will also be increased by gross gifted donation. And the third point is gross gifted donation reduces ANI. Again, what is the importance of this adjusted net income? You will get to know. Just wait. The final answer is adjusted net income. Now, what is the importance of ANI? The importance is if adjusted net income is more than 100,000, then personal allowance reduces. So the importance of adjusted net income is if individual is having ANI more than 1 lakh, then personal allowance will reduce. In fact, if adjusted net income is greater than equal to 1,25,140, then actually personal allowance becomes 0. What is the formula? Personal allowance is 12,570 less ANI, adjusted net income, minus 1 lakh into 50%. So whenever individual is having adjusted net income 1,25,140 or more, then personal allowance becomes 0. It will not be negative. Personal allowance will not be negative. It will be maximum. It can go to 0. Okay. Now let's see a question. Let's say we have net income. 1,30,000 and personal pension contribution is 15,000. Required is how much personal allowance is available. Very important point is whenever personal pension contribution is given, nothing is mentioned. We always assume it is net. It is 80%. You have to make it gross. Let us first calculate adjusted net income, because if adjusted net income is more than 1 lakh, then personal allowance will reduce. Adjusted net income, examiner has, let's say, given us a net income like 30,000. We'll deduct gross PPC, gross personal pension contribution. Whatever individual contributes, it is 80%. You have to gross up by multiplying this with 100 divided by 80. So 15,000 multiplied by 100 upon 80. I'm getting 18,750. Let's see. Adjusted net income is more than 1 lakh. It is 1,11,250. Since it is more than 1 lakh, so personal allowance will reduce. So this individual will not get entire personal allowance. 12,570 less adjusted net income is 1,11,250 minus 100,000 into 50%. Five, 625. 12,570 minus 5,625. So this individual will get personal allowance 6,945. So this individual is not going to get an entire 12,570. This individual will get personal allowance, but it will be 6,945. Let's see, the employment income is 1,40,000. Personal pension contribution is 20,000. Required students, I want everyone to calculate income tax liability. Please, I'm giving you 3 minutes to attempt this. I want. Okay, let's now try. Number one, we need to check how much personal allowance this individual will get. Number two, nothing is mentioned when whatever personal pension contribution is given, it is net. We have to gross it up. So let me show you working one, adjusted net income. There's only employment income, so that is your net income. 1 lakh 40 less gross PPC 20,000 multiplied by 100 upon 80. So 20. I'm getting 25. So ANI is more than 1 lakh. So this individual will not get the entire personal allowance. Normal personal allowance is 12,570 less 1 lakh 15 minus 1 lakh. 12,570 minus 7,500. So available personal allowance is 5,070. Employment income is obviously non-saving income, which is 1 lakh 40. Personal allowance 5070. So 1 lakh 40 minus 5070. Taxable income 1 lakh 34,930. Now let's calculate income tax. Due to gross PPC, basic and higher rate band limit will increase. Basic rate band is 37,700. We will add gross PPC, which is 25,000. So the basic rate band limit is 37,700 plus 25,000. It is 62,700. Higher rate band 1,25,140, but this will also increase by gross PPC, which is 25,000. So 1,25,140 plus 25. I'm getting 1,50,140. So basic rate band limit is now 62,700. Obviously, applicable rate is 20%. $12,540. Look at the taxable income. The total taxable income is 1,34,930, which is less than 1,50,140. So simply 134,930 is not exceeding high rate band. So simply from 1,34,930, we'll deduct 62,700. Whatever comes, that falls in high rate band. 1,34,930 minus 62,700. 72,230 falls in high rate band where applicable tax rate is 40%. 28,892. So students, I'm getting 41,432. Is this clear to everyone? Number one, first you need to check how much personal allowance this individual will get. For that, we need to check adjusted net income. Adjusted net income is more than 1 lakh. So ANI minus 1 lakh 50%, this individual gets personal allowance 5070. Employment income is 140 minus 5070. So the taxable income is 1,34,930. And basic rate band is not 37,700. Due to gross PPC, basic rate band is increased by 25,000. Now the basic rate band is 62,700. And high rate band limit also increased. So I hope it is now clear to everyone. Let me give you one more question and I want everyone to attempt this. Yes, clear. Okay. Obviously, the property income is a non-saving income. The required income tax liability. So students, you have 2 minutes to solve this quickly, please. I want everyone to attempt this. Okay, students, let's try together. Again, first we need to check how much personal allowance is available. Either it is available, not available. Let's see. Working one. Adjusted net income. So here the net income is the property income, nothing else. 180. Whenever personal pension contribution is given, nothing is mentioned. It is always 80%. You have to gross it up. So less gross PPC, 40,000 multiply by 100 upon 80. So 40, 100 upon 80, I'm getting 50,000. Wow. Adjusted net income is 1,30,000. So we have already discussed whenever ANI is more than equal to 1,25,140, personal allowance becomes 0. Okay, now let's calculate income tax. Obviously, property income is a non-saving income, which is 1,80,000. This individual is not getting any personal allowance. So the taxable income is 180. Basic rate band 37,700 will increase by the gross PPC, which is 50,000. High rate band limit will also increase. 1,25,140 plus 50,000. So this is 87,700. 1,25,140 plus 50. 1,75,140. So let's calculate income tax. Basic rate band limit is 87,700. That's basic rate. Applicable tax rate is 20%. 87,700 into 20%. I'm getting 17,540. Okay, now taxable income is 180, but high rate band limit is 1,75,140. And this individual taxable income is more than 1 lakh, more than high rate band limit. So now what to do? Now from 1,75,140, we will deduct 87,700. Whatever comes, that falls in high rate band. 1,75,140 minus 87,700. So 87,440. That falls in high rate. 87,440. Applicable tax rate is 40%. I'm getting 34,976. Still we have income to be taxed, and that falls in additional rate. So from 1 lakh 80, we will deduct 1,75,140. Whatever comes, that falls in additional rate. 180 minus 175,140. 175,140. I'm getting 4,860. Applicable tax rate is 45%. 2,187. 17,540. Students, I'm getting 54,703. Is there any question on this 54,703? Please ask. We have last minute for the class. If you have any doubt on this question, you can ask. Number one is this individual is not getting any personal allowance. That is very important because having adjusted income either equal to or more than 1,25,140, personal allowance becomes zero. So property income is a non-saving income. 180, the entire 180 becomes your taxable income. Basic rate band is increased by gross PPC, which is 50. The basic rate band limit is 87,700. High rate band limit is 175, 140. But this individual is having taxable income 180, more than high rate band. So after 175, 140, whatever comes, that falls in additional rate. So any question? Is this clear, students, to everyone?
Yeah, it's clear, sir.
Okay,
The only
students, in
problem,
today's class, I have given you the revision of the very first class as well. So today we have covered the first class also. So it covers the first and the second, both the classes. But from coming week onwards, we will be obviously revising the topics. Along with the topics, we will be doing Kaplan kit questions as well. So I want everyone, but obviously the number one priority is try to complete your pre-recorded lectures as soon as possible so that you can get more time for the practice. Another, I would say, request, please try to attend all the live revision classes. They are extremely important. And it is not only taxation. We are conducting the live revision classes in each and every paper. So these classes are the game changers you might have seen today, because you are getting a chance to do the question in a live revision classes. So thank you very much that you people have attended the today's class. Do give the feedback of today's class in your respective WhatsApp groups. So thank you very much.